The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box Europe. I'm Steve Sedgwick with Karen Cho and Juliana Tattlebaum. And these are your headlines. The art of the deal. President Trump claims to have inked, more than 200 trade deals in a wide-ranging interview to mark his first 100 days. But new polling paints a grim picture for the commander-in-chief.
I believe that he is referring to sub-deals within the negotiations we're doing. Some of those are moving along very well, especially with the Asian countries.
There was the caveat. Well, we'll hear from the US Treasury Secretary Scott Bessent today at 1 p.m. London time.
The US and Europe take a small step forward on trade, with Commission President Ursula von der Leyen announcing she'll meet President Trump after a brief exchange on the sidelines of the Pope's funeral.
And President Trump's turbulent trade policies spark an exodus from U.S. assets, with equities seeing their worst start to the year versus peers in more than 30 years.
Well, a very good morning to you all. The producers are on tenterhooks because they know that I'm trying to misbehave myself already at our inaugural show. Karen, you and I have worked on this show for well over a decade. Juliana, welcome, good luck, fabulous to have you with us as well. We know what a great contributor you are, so we are thrilled that you have made the two-legged stool three-legged once again. So welcome to the show.
Well, thank you so much. I could not be more excited.
Let's just see how you are after the rest of this week as well. Whether 15 hours of working with me changes your mind on that. Anyway, in the meantime, President Trump says he has agreed to 200. He's amazing. Wait till you hear the caveat. He has agreed 200 trade deals with countries across the globe. Speaking to Time magazine, Mr. Trump said announcements will be made over the next 3 to 4 weeks, but didn't name any countries where deals have been completed. Oh, okay. The president looked to explain his role by comparing the US, wait for it, to a department store. Yes, the US is one big happy department store with other countries as customers. Oh, okay, I thought they had their own stores. Anyway, saying, quote, I own the store. Oh, it's his store. It's not America's store, it's his. And I set the prices. Trump officials speaking this week and were unable, though, to back the president's claim on trade talks. The Agriculture Secretary, Brooke Rollins, said several deals were close. Treasury Secretary Scott Bessent told ABC talks are ongoing.
I believe that he is referring to sub-deals within the negotiations we're doing. And, Martha, if there are 180...
But those aren't actual deals.
Martha, if there are 180 countries... There are 18 important trading partners. Let's put China to the side because that's a special negotiation. There's 17 important trading partners, and we have a process in place over the next 90 days to negotiate with them. Some of those are moving along very well, especially with the Asian countries.
It's nearly 100 days since Donald Trump was inaugurated as President of the United States for the second time. In that time, he has upended the global trade order, defied his own judicial system, and fired the starting pistol on what he called the largest deportation program in the country's history. So far, America appears to have buyer's remorse, with the latest NBC poll showing more than half of respondents disapprove of his performance.
Now, that figure only grows more stark on the economy, with more than 3/4 of Americans expressing disapproval in a New York Times Siena College poll. 44% of respondents say they expect to be hurt personally by Trump's economic policy. This as American equities have underperformed the rest of the world by the widest margin in more than 3 decades this year. The MSCI's USA index shedding 11% year to date. That's versus a 4% uptick for the rest of the world, the widest divergence since 1993.
Right, okay, so let's get straight to this. Luckily, the president gives us a font of great news every day. 200 trade deals. 200 trade deals. Well, even straight away, we heard Scott Bessent saying, in fact, you know what? Let's listen. We've heard the sound already. I want you to listen to this one more time. It is really important. Listen to what Scott Bessent had to say.
I believe that he is referring to sub-deals within the negotiations we're doing. Some of those are moving along very well, especially with the Asian countries.
Oh, sub-deals. You mean where there's a little bit of the overall trade deals that has been covered? I mean, quite frankly, we don't even know if they are negotiating with 200 countries. I'd like to know what those 200 countries... Is it the penguins of Norfolk? Do you know where Norfolk Island is? I have no idea where Norfolk Island is. I had to Google it.
Well, I do, actually.
It's in the Antarctic.
Right.
And oh, yes, of course, because it's an external territory which is kind of presided over by the Australians. Right. So you would know. But the fact of the matter is the penguins have got a 10% tariff as well. Have they negotiated with the penguins?
That matter. It's one country here, and China arguably is the country that matters.
Well,
and Scott Bessent was refusing to provide witness statement about a phone call taking place between President Xi and President Trump. So number one, what do we have? Perhaps no conversation here, but we have a path. And what does a path mean? So far, there's been an interaction on the sidelines of the IMF in Washington. And I can tell you, it is a very busy area. You have got two twin buildings and a pathway in between, and most people interact. And of course, there are meetings on the sidelines. Does that suggest there's been breakthrough on tariffs? No, it doesn't. So the problem here is that we have another 100 days ahead of us. Will there be more certainty or less? And the view so far from one official is that there could be more torpedoes and also some sort of snowball going downhill. That does not sound positive.
But we don't have another 100 days, Karen. We're already eating into the 90-day pause on tariffs as well. Let me just talk to our viewers about another chap. Anyone know who Pat McFadden is? I don't expect you all to know. This is the Chancellor of the Duchy of Lancaster, and he's basically talking to Sky News this weekend saying, I don't think a deal's certain. Now, if anyone's got a good chance of a deal, it's the Brits, because quite frankly, the President has quite a favourable view of Britain as well. We don't have this massive surplus with the United States as well. So actually, a lot of people saying the Brits have got a good chance. This is the UK government saying, I don't think it's certain this weekend.
Well, let me come to the 90 days, because I think if you look at market performance, investors have become a lot more relaxed in recent weeks. Last day we saw markets in the U.S. record 4 straight days of gains. Why is that? Well, we've been given this 90-day pause on tariffs, but it's not clear what's going to happen once we reach that 90-day mark. Are we going to see the deals come through? Are we going to see that extended? And it feels like markets have become complacent around the idea that we are going to see ultimately some sort of agreement come for a number of these countries, that worst case scenario has been avoided. But the reality is we don't know.
What's happening in the next 90 days is fascinating in the sense that Trump will embark upon an extended trip abroad. So you will see the meet and greet opportunities, and will those in-person conversations on soil that is homegrown to many of these nations make a difference? For instance, Saudi Arabia, Qatar, United Arab Emirates, these are areas where there'll be part of an inaugural trip for the president. So I think that'll be fascinating to see whether there can be a breakthrough there. And don't forget, there's a tax package coming as well. There's already talk among Republicans as to who will be lining up behind the president. So that'll be interesting as we talk about what lies ahead in the next 90 days or 100 days, however you want to cut the next phase forward.
Well, I mean, we're already counting down. I think we're probably down to 70-odd days now as well. But your point about complacency is well made as well. Can I show the VIX of what it did last week? It's back down to 24.8. Now, that's elevated. You know, the historical average, as you can see, is well below that, somewhere in the region of 14, 15 mark as well. The VIX came off 16% last week as well. And look, the economic data is okay at the moment. Let's not just try and say that things are terrible. But the retail sales data is okay. The jobless claims last week, it's okay. So there is no sign yet of a cratering of the US economy. And that's what the administration will be hanging on to. But the fact of the matter is, the US stock market has had a dreadful, dreadful run. The worst since actually Gerald Ford in 1974 when he took over from Nixon. And there were a lot of problems in the 70s there, as many of us remember as well. But the fact of the matter is, if we're doing historical comparisons, 1929, I know that it's probably not fashionable to say this, was a drop in the ocean to what came after 1929. When do you think the US stock market troughed? 1932. So you had the crash, which grabbed all the headlines.
There's a lag period, is what you highlighted.
And we had those 11%, 12% days on Black Thursday, Black Tuesday, Black Monday. But the fact of the matter is, the market can go down aggressively for a long period.
But what's good news and what's bad news, and you may have a view on this too, Juliana, because I thought it was fascinating. If you look at the Fox News poll, 55% majority approved on border security. That was the upshot. Most of the polls were in lockstep, and the verdict was quite negative. But if you're looking for the one bright point, it was on border security. But then this goes to the heart of the jobs numbers, that while we may see some employment levels that are very strong for the economy, and that suggests that perhaps we can avoid a recession, if the negativity comes through because there's been a very strict border policy and there's just not the skill set to hire and to tap into, then we get higher prices again and we go into that wage price spiral.
That's clearly a key long-term issue for the U.S. If we get Trump's agenda bringing those jobs back to America, let's say that he gets his way and ultimately these policies do that, U.S. unemployment is hovering around 4%, so it's already an incredibly tight labor market. And then you introduce tighter security at the borders. That creates a situation where wage pressure becomes central, inflation becomes more problematic long term. So that's all if it goes well for the Trump administration.
Okay, I think we've done that one service for now, but there's so many other aspects which we will cover over coming days and weeks. But safe to say, got a terrific guest on programming a little bit later on today. We're going to get more on US trade policy and the state of the country's economy with the Treasury Secretary Scott Bessent. That interview will be at 1 p.m. London time. In the meantime, actually, a lot of composure from the US markets last week, Juliana.
That's right, Steve. Let's take a look at how Wall Street closed up on Friday. We saw 4 positive sessions in a row. That was the first time that we saw a 4-day winning streak since January for U.S. markets. So as we were just discussing, potentially a little bit of complacency there, but certainly the takeaway is that investors stateside have breathed a sigh of relief as the rhetoric has become a little bit more positive around the potential for some trade deals. So the Dow Jones ending about 5 basis points higher, S&P about 0.7%, and the tech-heavy NASDAQ led the bounce around 1.3% on Friday. In terms of overnight trade in Asia, let's take a look at where things stand. We've got a mixed picture. The Hang Seng over in Hong Kong up about 17 basis points. The Nikkei 225 over in Japan leading the gains in the Asian region, up about 0.5%. A little bit of a pullback, not much in the China mainland market. The Shanghai Composite down 4 basis points at the moment, and the Kospi also trading slightly weaker. As for European futures, here's where things stand right now, a few hours away from the about an hour away from the European market open. We are looking at a positive start to trade for this week. In terms of U.S. futures, what's in store? We have got a bit of a pullback, nothing major in terms of the magnitude of the move lower, but we are indicated negative at this stage. The Dow Jones about 150 points lower, the NASDAQ and the S&P also looking to pull back ever so slightly.
A bigger risk event for markets this week. It is the busiest week this earnings season so far, with around a third of the S&P and Dow reporting. We're also looking out for reports from 4 of the Mag 7, that's right, the Magnificent 7, that's Microsoft and Meta on Wednesday, Amazon and Apple on Thursday. It's also a bumper week in the pharma space. Pfizer reports on Tuesday, with Eli Lilly 2 days later.
Well, coming up on the show, Bitcoin surges on hopes of a trade deal with China. Why does it surge on hopes of a trade deal with China? Anyway, it does. We're going to find out why with that story after the break. Plus, Charlotte will join us for a GDP deep dive ahead of the ECB's rate decision next week. And amid tariff turmoil, we'll discuss tech stocks with Stephen Yu, who is the co-founder of Blue Whale Growth Fund. That's coming up 8:30 British Summer Time.
To the latest in tech, and Huawei has reportedly developed a new AI processor chip and approached some of the Chinese technology companies to test it. That's according to the Wall Street Journal, which says the tech giant is hoping to replace some of Nvidia's higher-end products with its latest offering. The view here is that recent breakthroughs in the machinery side to tackle ASML may be giving Huawei the cutting edge now.
Let's move on to Bitcoin. Prices just a tad lower today. Let's have a quick look at this, where it's currently trading after briefly topping $95,000 for the first time since February. So where we go, 94,360. The surge came amid expectations of progress on a US trade deal with China, after US President Donald Trump claimed he spoke with the Chinese counterpart. Let's get to Jean-Marie Mognetti, who is the CEO of CoinShares. Jean-Marie, it seems to me that the advocates of Bitcoin want it both ways. I read in my copy, it's rallying on the back of hopes for a trade deal, and yet I also read it rallied on the back of the fact that it's a safe haven if there's not a trade deal. Come on, the advocates, I mean, they're having a good run, and I make no bones about it. They can't have it both ways.
First of all, thank you for having me in this beautiful new studio. So congratulations.
Well, you're our first guest. You know that. I mean,
I'm
sure
flattered.
they'll be giving you a CNBC mug or something.
I can't wait for the medal. But thank you very much. No, you're absolutely right. But we have to step back a little bit and understand that. If you look at 08, market crisis, margin call everywhere, gold dropping, despite the safe haven quality of gold. And at the same time, Bitcoin today is a very young asset, and a young asset needs stability to grow. And so the reaction are a bit, I would say, both ways, as you mentioned. But if you zoom out, you see that the good stuff are arriving. Like Bitcoin since Liberation Day has been outperforming NASDAQ by 12.5%. You know, there was the biggest week of inflow in the Bitcoin ETF last week with $2.7 billion in the complex, which was the biggest week since January. So,
Jean-Marie, let me jump in because you said there something that was fascinating to me. You said a young asset needs stability to grow. Mm-hmm. But I understand that actually a lot of the advocates of Bitcoin, they don't want stability. They want a one-way track. They want this thing to go up. They want 150,000, 250,000. A lot of the people who buy Bitcoin, they're doing it because they think it's going up, not because it's going to be stable.
No. When I mention stability, I'm talking about price stability. I mean, like, the overall context is changing every day and at the mercy of a tweet or the mercy of a very quick news. So they need a bit more clarity. At that point, gold has been playing this very stable place where people are investing in gold, and you can see the inflow in gold. And the same thing happening in Bitcoin with a bit of a delay. So there is a bit of a, I would say, delay in the engine warming up.
Yeah, no doubt about it in terms of volatility. The money's been flooding out and trickling back in. But what jumped out to me were some figures that CoinShares actually produced about the cost of mining. Mining costs $137,000 in the final quarter. That is much higher than where the Bitcoin price has been trading. What is that disparity, even if the price settles down a little bit on those mining expenses? What does it mean in terms of the cost of producing a Bitcoin versus the market price? What's the link here?
I think the most recent price average is $82,000. So there's been some adjustment with mining adjustment and mining difficulty adjustment. So at the moment, we're in a good position for mining. Miners are under a lot of pressure themselves from the tariff. The tariff are like punishing the miners, and you can see it in the mining valuation and the mining stock price. So, you know, the mining industry is under pressure, but it's
But this is different to gold, right? So gold, you invest in the infrastructure, you have it for the long term. With Bitcoin, because of the type of asset we're talking about here, depreciates very, very quickly. You need to replace some of that architecture. So there is a link here, the correlation between
there is a link.
infrastructure.
There is a link, but like at the same time, the machine can be replaced and repurposed for all the kind of inference model in AI and all the stuff. So it's not like you just have them just for this cycle. It's like, yes, it's for a special cycle in the crypto industry, and then they can be moved to other facilities. So it's kind of, I would say, management of your production inventory.
Jean-Marie, let me take you back to your comment about Bitcoin's performance versus the NASDAQ since April 2nd, because we have seen outperformance of Bitcoin versus the tech-heavy index, but that's a relatively recent phenomenon. For much of 2024, they were actually quite correlated. There was a high correlation between Bitcoin and the NASDAQ, which made many, to Steve's first point, think that Bitcoin just trades like any risk asset. What's behind the divergence that we've seen now, and can we really trust that it's not going to begin trading once again, just like any other risky asset?
Well, you caught me on the day. I don't have my crystal ball with me, so I need to, I need to go back a little bit to base principle. And you know, if you go back in time, you can see that all the assets have been correlated to all the assets over time at different degree of correlation. And yes, it's true. Last year, Bitcoin has been very correlated to NASDAQ. It was a risk-on environment. What we expect to see is like how Bitcoin kind of like validates the thesis that it's going to decorrelate effectively and become this uncorrelated asset over time.
When I think about the investor base in the Mag 7 and Bitcoin, there is a lot of overlap from the retail community. What have retail investors been doing in crypto since April 2nd?
It's very funny because we are at, I would say, a crossroad in the sentiment in Bitcoin or in crypto in general, where the retail has been very, very negative in terms of sentiment, while the institution has been very, very positive. And you can see that materializing, at least for the first time over the last couple of weeks, on the what we call the, I would say, the institutional premium index, which is basically the delta between Coinbase Pro in the US and Binance, which is mainly Asia-focused and retail-focused crowd. And you can see this index, this premium effectively growing, shows that institutional are coming back, while it was completely depressed for the last, I would say, quarter.
Jean-Marie, we've done something in this interview which I don't think any of us have noticed. We spent the whole interview, we teased it as we're going to talk about crypto. We've spent the whole interview chatting about Bitcoin. And I think that's really quite interesting. And it does follow the thematic which I've seen over the last couple of months, that people are now diversifying, saying that Bitcoin and crypto are divorcing somewhat. Are there a lot of cryptos that are finally now just going to go by the wayside?
So just to go back on your first point, which is we're talking about Bitcoin, at CoinShares specifically, we have always positioned Bitcoin as a special asset, and then you get crypto complex in general. So Bitcoin plays this kind of, depending how you want to call it, digital gold or whatever people want to phrase it, and then you get all this crypto, I would say token, L1 token or whatever, which are much more akin to small tech stock. And so it's very different narrative, very different investment thesis. And you can see it even in the way the big players are coming into crypto ETF. They're very much focusing on Bitcoin first and maybe Ethereum, but it's not going into the full tail of it because it's a much, much more difficult thematic to explain.
Yeah. This one's just for you, Steve. Let me ask you about Ripple, just to cast the net a little bit wider, because there was an ETF that launched in Brazil recently, and this was a Ripple one. The launch of these spot ETFs was meant to be a landmark moment for the industry, sort of kicking them forward, getting more liquidity, more breadth into the markets. But then, of course, we've had the Trump tariff situation. Do you think that the spot ETF launches, the innovation in this space, can bring back some more interest and really rally those volumes internationally?
So the Bitcoin ETF launch in the US was almost like a perfect storm. Everything was lined up together and BlackRock was leading the charge, so it was a very, very perfect alignment of condition. You can see after that the Ethereum launch was not as good, and so you get a function of market cap, which is happening here. Now, if you go back to Steve's question as well, which is tallying to yours, Bitcoin dominance in the overall complex is at the highest point it has been in a very, very long time. So obviously, we're going to talk much more about Bitcoin, and the rest is following. But it's an interesting landmark to see how the SEC is going to approve a new ETF, on the 33 Act format. The approval we saw last week on the Ripple, especially in the US, was a 40 Act. So it was basically based on the future of the CME, which are about to launch in a few weeks. So it's a bit of a different kind of, I would say, achievement. The real achievement to see a 33 Act approved by the SEC.
Bitcoin evangelists have talked for many, many years now about Bitcoin as an alternative store of value to the dollar. And it feels like right now is probably the best opportunity for that thesis to come to light when we are actually talking about the dollar potentially losing its status as the safe haven currency of the world. But the institutional adoption isn't there yet. So what is a realistic view in terms of Bitcoin as a potential alternative to the dollar? How many years out is that possibility?
Well, as an alternative to the dollar is a very strong word, and Bitcoin was born by libertarian, and over time it evolved in its thematic as well. And so if you look at what happened last week, for instance, the despacking project between Cantor Partnership, Tether, Bitfinex, and sorry, I forgot the name. SoftBank, you end up with some institutional player coming together with some really crypto-native player. And that's showing you that effectively the border are much more porous than people may imagine before. And we get the same thing with Mubadala, getting a lot of investment in the story. So some investors are positioning themselves. There is more and more institutional demand for it, as I was mentioning with Premium early on. And at CoinShares, we can see it as well in the quality of the clients we are seeing. We were only based as a retail shop when we started in 2015 to bring ETF to the market. Right. And over time, the funnel and spectrum of clients, which are institutional, has been growing up and growing up and growing up to the point we're talking today to pension fund, which we were never able to speak to 10 years ago. So I think it's a long process. It's not people want everything to happen overnight. We're in a consumerist society where at the flick of a remote, we want to be impatient. Yeah. Well, unfortunately, it takes time to build a sustainable business.
Jean-Marie, fantastic point there about the role of big tech as well. Thank you so much for being our first guest in our brand new studio.
Thank you for having me.
Jean-Marie Mognetti with us, the CEO of CoinShares. Elon Musk's XAI holding is reportedly in talks to raise $20 billion. That's according to Bloomberg News. It would value the AI startup at more than $120 billion. XAI acquired X in an all-stock deal last month, valuing the social media platform at $33 billion and XAI at $80 billion.
Okay, another suitor or potential suitor for ITV has emerged. This time it's the French media group Banijay. It's in talks to make a takeover offer for ITV or its studio production arm. This, according to the Financial Times, it says takeover talks for the group, valued at around $3 billion, are at a very early stage and may not progress to a deal. ITV has also held talks with other investors as well as explored offers for rivals. And just as a caveat on this one, they will not be the first, and I wonder if they'll be the last suitor for ITV, which has an amazing back catalogue, has amazing production, but has had all kinds of issues.
Love Island, are you talking about Love Island? I didn't know you would be a fan of Love Island.
I have never watched 2 seconds of Love Island, I'm afraid, Karen, as you knew that answer as well.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.